Okay, so it's now 6:35. We've already had a few people join us. And as the others need admittance, I will let them in when they knock on this virtual door. First, let me welcome everyone to our first-time homebuyer and mortgage webinar. My name is Adam Sherman. I'm the president, CEO of Brotherhood Credit Union. Quick introduction about BCU. We've been incorporated since 1934. We operate as a full-service financial institution where you'd find the same lending and deposit services that you'd find at the big mega national banks, international banks. However, as a credit union, we are able to offer our loan rates at a lower rate and our savings rates are higher than most of the competition. As a credit union, we operate under the guidelines of a specific field of membership, which is open to anyone living or working in Essex, Middlesex, Norfolk, Suffolk, Massachusetts. We're now 115 million in assets, headquartered in Lynn with a satellite location in Marblehead. We have three speakers this evening. We have Mark Skillman, who is our Vice President of Mortgages, as well as our Business Development Officer. We have Igor Baldiga, who is a realtor from Keller Williams. And we have attorney Neil Cohen, who is a closing attorney for the law offices of Cohen & Cohen located in Salem. Just a couple of housekeeping remarks. Number one, I kindly ask that you'll leave your computers and devices on mute until we get to the very end where there's a Q&A session. There'll also be a $25 Amazon gift card door prize. We're gonna do that before each speaker. So I'll be doing one in about 30 seconds. And I'll also be sending out a certificate to all the attendees this evening's meeting, which will allow you a $500 credit towards your closing costs if you so decide to get a mortgage with Brotherhood and you close within the next 6 months. So with that said, I have the bag here with all the attendees this evening. I've put back in the people who are currently in the room. So we'll see who the first one is. The first one, Stacy Gans, congratulations. Yeah, there you go, Stacy.
There you go, Stacy.
For those who don't know Stacy, I've known Stacy probably my entire life. I probably haven't seen her many, many years. I see her on Facebook. If anyone's looking to get in shape, nutrition, working out, definitely look her up on Facebook because I think I got the COVID-20 going on right now. Well, you're very, very welcome for the plug, Stacy. Not a problem at all. So with that said, the introductions have been made. I'm now going to give the microphone over, or the proverbial microphone over to Mark Skillman, again, our Vice President of Mortgages and Business Development here at BCU. Mark, you got the floor.
Thanks, Adam. First of all, good evening, everyone, and thank you for attending our webinar. As we our advertisement, this is our first one, so we're excited to see all the people who are attending. I'm going to take a couple minutes to talk about the mortgage loans, different products, the process. Forewarn, the mortgage industry these days, especially because of regulations and laws, both state and federal, has become a very complex and time-consuming process. While I'm talking, I'll try to keep it as simple as possible, but get the main gist and points across. At the end of this webinar, I believe Adam's going to be sending everyone out some correspondence, and on it will be my contact information, be it a cell phone, office phone, or email. By all means, feel free to reach out to me anytime, and I'd be more than happy to sit down and on the phone and have a lengthier discussion. So, kicking it off, mortgages. What are they? Basically, a mortgage is like a car loan, but it's on your home. It's the loan that most people use these days, in the past, to buy properties, especially up here in New England with properties escalating so quickly, which Igor will go into. A lot of people don't have significant cash to put down on a home or to buy a home outright free. So what is a mortgage? So mortgages generally go for anywhere from 10 to 30 years. The average person who buys a home for the first time is generally going to get a 30-year mortgage. And the reason being is your mortgage payments are generally smaller that way and more affordable. When one is applying for a mortgage, whether it's a refinance or purchasing a home, not only does the lending institution want to make the payments comfortable to you and you can live with them, we also have to look at risk factors that we're guided by. And we want to make sure that you as an individual or as a couple qualify for the mortgage. Because in the long run, when we're giving a mortgage, and I know there's everyone's out there, oh, they'll foreclose on you, they'll take the house. Believe it or not, I don't want your house. I want to give you a couple $100,000 for 30 years. And in a perfect world, I'd like you to pay me back over 30 years. But as we know in America, the average mortgage flips around every 5 to 7 years. Tonight, rather, we're going to concentrate mostly on home buying. And I'm assuming a lot of people here tonight are probably first-time home buyers. So we're going to try to gear it towards there. When looking to buy a home, the first step one wants to do is to do either a pre-qualification or a pre-approval. And I'm going to describe the differences for both. We'll start with a pre-qualification. If you're a year to 6 months out from buying a home, you're just beginning, but you're within that year period. You want to sit down with a lender and talk to a loan officer and get what's called a pre-qualification. Pre-qualifications can be done differently by different institutions and different individuals. Basically, what a pre-qualification is you're going to talk to the lender. The lender's going to ask you certain questions. How much do you make? How much savings do you have? And a few other things. They might ask you also questions about your credit. When I'm doing a pre-qualification for someone, I may or may not even pull a credit report on them if they've told me it's very simplistic, and I've determined that I don't think they've had any bankruptcies or anything like that. And then what the lender's going to simply do is going to back in and say, how much do you make? And they're going to qualify and say, based on the information you've given me and the assets that you have to put down on a property, here's what you qualify for. So it gives you a basic idea or a neighborhood of where you're at. But when that person comes into me, the first question I always ask them is, well, what price range are you looking at, Mr. Homebuyer? And when he or she will say, well, I'm in the $1 million range. Sometimes I've got to bring them back down and be like, okay, well, we're looking at a $400,000 mortgage, and that's what we pre-qual for. So pre-qual, sometimes I'll ask for pay stubs, sometimes I won't, and basically, I'm not verifying any of the information I'm getting from the borrower, potential borrower. I'm just using the numbers they're giving me and saying, you're in this ballpark. The next step, moving on, would be a pre-approval. A pre-approval is you're now 6 months or you're ready to buy, especially if you're out there and you're talking to Igor and Igor's showing you home and you're like, if I see something this weekend, I want to make an offer. Most realtors, and Igor will go into this a little bit more, most realtors, they want to make sure that the borrower has been pre-approved by a lender. Ergo, the difference between the pre-qual and the pre-approval. Some lenders are still doing pre-approvals differently. A thorough lender, like Brotherhood, what we will do is we will document a pre-approval application the same way we would a regular mortgage. What does that mean? I'm going to ask you for a list of documents. And the standard documents that we're going to ask for a mortgage are your pay stubs for the most recent 30 days, your tax returns, federal, 1040s, plus W-2s, 1099s for the past 2 years, your asset statements, starting with your credit union statements, then bank statements, retirement, stocks, bonds, cash and assets that you have, whether you're using it for the purchase of the property or whether you're not. I'm then going to ask you for if you have the possibility of getting a gift, and I'll go into that in a second with certain programs. Some programs allow you to get a gift from an immediate family member. So there are programs where you don't even have to have a penny to put into the property. And if it's gifted, both the down payment and the closing costs, you can get into that property. We'll then pull what's called a tri-merged credit report. As most of you may or may not know, there's 3 credit repositories in America: Equifax, Experian, and TransUnion. Tri-merged is what a lender uses, and it pulls all 3, and it gives us 3 credit scores. For mortgage purposes, a lender will always use the middle score. And this way, I'm looking specifically at your credit to see if there are any issues we need to change or if there are where you qualify. These days, with mortgage lending, and this has changed in the past 10 years, a rate one receives for a mortgage, be it a refinance or be it a purchase, can be determined on their FICO score. There are other variables involved, like the loan to value, and that means the percentage that the loan is of the value of the property, But when you combine loan to value combinations with one's FICO score, that's how you get someone's rate. And obviously, the better the FICO score, the higher the score. And generally, that's a 720 or plus. You're going to get best rates. With the pre-approval, we're basically doing an underwrite, a formal underwrite of the mortgage minus the property. We're making it contingent upon the property. I'm not doing an appraisal. I'm not doing a title exam on the property. I'm underwriting you, the individual borrower, or the couple. And then that way we'll come back and we'll then issue a pre-approval letter that basically says you've been pre-approved by a lender, which we have also run through what's called an automated underwriting system through one of the two major purchasers of mortgages in the country, Fannie Mae or Freddie Mac, and we'll issue a letter good for 60 days. And this is generally what most realtors are going to want to see from you when you go to look for a home. So that's the pre-qualification and the pre-approval. Before moving on to the mortgage process, let me just go over a couple do's and don'ts when we're looking to buy a home. First of all, keep your job. You got to be employed, unfortunately, for 2 years to get a mortgage these days. It does not mean you have to be in the same job. However, you have to be in the same industry. If you've got job skips, now there's allowances because of COVID, but generally lenders want to see 2 consecutive years, preferably in the same job, same company of employment. The second thing you're going to want to do is you're going to want to start saving. Most down payments that first-time home buyers put when they buy a home, especially up in New England when homes are very expensive, is either anywhere from 3% to 5% down. But 5% down of a $450,000 is a good sum of money, and a lot of people don't even have that. We do offer 2 100% financing programs, and the first one we offer is for vets, and it's the VA mortgage, 100% financing. No down payment, you just pay closing costs. That's it. The second one we offer, but that is just, that's just for veterans. You have to be a veteran or you have to be served in the military, either active or non-active. Second one we offer is what's called a USDA mortgage for 100%. That's for anyone. No income guidelines, but there are territorial guidelines. You cannot, and USDA being the United States Department of Agriculture, one could assume it's used mainly out west in rural areas. But there are areas. Southern New Hampshire offers USDA loans, and it's strictly by, as I said, territory. So if someone's looking to buy a property in Lynn, you can't get a USDA loan. But if they move 25, 30 miles north to New Hampshire, in certain counties, you can get a USDA loan. So that's one way of maybe changing your location to go get to suit your needs for your financing if you don't have the down payment. Getting back to the majority of first-time homebuyer programs, you're either putting down 3% with a first-time homebuyer program, or the biggest first-time homebuyer program out there to this day is still the FHA loan. An FHA loan allows you 3.5% down payment on the property, and they also a little bit more relaxed on the underwriting guidelines. So it's easier for a lot of people to get a loan through the FHA program than it is conventionally. FHA is not a loan from the government, it's a loan from the direct lender. You get it from the lender. The government is guaranteeing the loan, so therefore they make up the rules and they make up the underwriting guidelines. And obviously, FHA, being a product of HUD, the Department of Housing and Urban Development, they're there to stimulate home ownership in America. So the loan's a little bit easier. Once you've got your pre-approval, basically what you want to do is you want to keep your credit situation the same, because the lender's going to look at your credit report and that's how they're making their decision, plus your income to qualify you for the mortgage. So you want to change that. Getting forward to the do's and don'ts when you're looking to buy a home. Don't go out and apply for credit anywhere else. A car loan that you're applying for, which is a $350 payment, is going to take $85,000 off the price of your house that you can no longer now afford. In simplistic facts, just to let you folks understand what the lender looks at. Basically, a lender qualifies you on 2 major things. They qualify you on your monthly, what they call debt to income ratio, and they qualify you on your credit. The credit is your credit report. The better the score, the more comfortable the lender feels that you'll be making payments to them in the future. Your debt to income, and I'll break it down in simplistic terms. Let's say someone makes $12,000 a year. Lenders look at everything on a month-to-month basis. So if someone's making $12,000 a year, they make $1,000 gross, and we use gross income a month. General rule of thumb, of that $1,000 that you're grossing every month, no more than 43% can go towards your new mortgage on your home and all your other debt. So if someone's making $1,000 a month, they can be paying out no more than $430 to their car loan, their student loans, whatever the minimum payments are on their credit report for their credit cards, plus the housing payment. And what's the housing payment? It's principal and interest on your loan, just like your car loan. It's 1/12 the annual taxes on the property. It's 1/12 the annual homeowner's insurance on the property, and it's your PMI payment. PMI is an acronym for private mortgage insurance. The industry standard is anything under 20% down when you buy in America, no matter what lender you go to, you're paying private mortgage insurance. And basically it's defaulters insurance. It guarantees the lender cover any losses if one defaults on the loan. And the feeling being in the industry for years and years now is the less you put down, the higher the rate on default. For all of that housing payment, plus all your other monthly credit, no more than 43% of your gross monthly income. Getting back to the FHA loan for a minute, the government allows us to go up to 50% of one's monthly income. So you can see an advantage there. Sometimes the FHA loan is the only recall someone has to get into a property. And that's why they go there. The last thing I want to talk about is the mortgage process. The mortgage process, once you and Igor will go over the purchasing process and the stages there, but once your offer has been accepted, you're going to formally apply for a mortgage with a lender. And you want to do that as soon as possible. Once you get your application in, and again, it's all that documentation that I mentioned before for the pre-approval. So if you've already done your pre-approval, you're already halfway there. And all you have to do with your loan officer is just update pay stubs and asset statements. You're going to fill out a formal mortgage application. You're going to submit it to the lender with all your documentation. The lender's going to probably get a check from you for the appraisal amount, anywhere from $350 to $700, depending on the type of property. And they're going to start processing the loan. During the processing, they're going to verify everything you gave us. They're going to send out what's called a verification of employment to your employer to verify that you're working there and verify that what you put on the application you're making, even though we've got the pay stubs. They're going to verify your tax returns by sending a form to the IRS to make sure that the tax returns that you submitted to us are the actual tax returns that you submitted to the federal government. They're going to verify your deposits, cash that you have to put down, and or any other assets you have that might qualify you for the loan. Process from application to closing can be anywhere from 30 to 60 days. Generally, it's around 45 days, and we can get a little bit sooner. At the same time, they're also doing an appraisal on the property. An appraiser is going out to see that the value that you're paying for the property, in essence, is the actual value. So it's protecting you, but it's protecting the lender. So we want to make sure that that is the actual value we're using. And then Neil Cohen, the attorney, will go over. They're doing a title exam on the property and basically making sure that the seller has the legal right to sell you the property and all that other good stuff that Neil will talk about. Once the appraisal and the title comes in and we're ready to close, we now at a stage of what we call clear to close, and we go to the closing. At the closing, unlike buying a car, you take title, which means ownership of your property immediately that day. You buy a car, you get a car loan, we get the title. So you're paying the loan, but the lender gets the title. With a home, you take title to that property immediately. For the three major documents you're signing at the closing are the promissory note, just like a car loan. I promise to pay Brotherhood Credit Union $350,000 back at such and such a rate over 30 years. You're signing the title to the property that you have ownership to the property, and then you're signing the mortgage, which is the security instrument. And the mortgage is what allows the lender to take the title away from you if you break your promise on the promissory note. There's about another 55 other pages you're also going to be signing at closing. but those are the major ones. We're on time constraints here, so I want to wrap it up. Again, hopefully it wasn't too confusing. And by all means, anyone, if they have any questions, reach out to me. I think we're having a small Q&A afterwards, Adam. So ask me any questions. And that's Mortgage Lending 101 by Mark Skillman of Brotherhood Credit Union.
Mark, that was a fantastic job. And again, yeah, we are taking Q&A afterwards, and I will be sending out an email to all the attendees with Mark's information and Igor's and Neil's information as well for anyone who has any questions. I'm going to turn the microphone over to Igor in just about 1 second, but as promised, I do have another door prize. Again, a $25 Amazon gift card. Give me 1 second. Michael Sonia. Michael, congratulations. You are the winner, and we will get that out to you. So congratulations. Spend that wisely. And with that said, I will now give, you're most welcome, Mike. We'll now give the floor to Igor Baldiga. Again, Igor is a realtor from Keller Williams, and there's a lot going on in the real estate market right now. We're hearing about insane prices and how we can make our offers stand out a little bit more. And Igor, I'd like to hear your expertise on this, so I give you the floor.
Thank you so much, Adam. Thank you everyone for being here today. Mark, great overview of mortgage process. Thank you for that. It's amazing how much you can learn still even being in the business. So much detail there. Today I wanted to talk about 3 different things about what's a role of a realtor, how does the real estate market look like today, and what does it mean to buyers, and last but not least is about how to get your offers standing out in this market. So realtor, first and foremost, is a fiduciary, and fiduciary is a person who is legally obligated to represent his client's best interest and put them above any other interest, including himself. I like to say that a realtor is your sword and shield in your transactions. With the sword, we fight on your behalf, we protect your interest, and we shield you as buyers from highly emotional aspects of home buying process like negotiations. As a buyer's agent, right, because there's 2 sides to realtors. There's a listing side when we represent the seller of a home, and a buyer's agent when we help you find the home for purchase. So as a buyer's agent, a realtor will act as your advisor throughout the process. We'll help you understand the current market and what it means to you. We provide market analysis when we do a financial analysis of how the market is performing, what is a fair market value of a home, and so on. We draft and review documents like offers, which is a very important aspect of home buying process. We handle all negotiations on your behalf, which is probably the most labor intense and emotionally elevated part of our job, is negotiation that offer facilitating the back and forward communication between your team, which is your home buyer team, as your realtor, your lender, and your attorney, and facilitating that conversation with everyone on the other side of that transaction. We connect you with reputable third parties like contractors, appraisers, inspectors. We coordinate inspections, appraisers, making sure that everyone can get to the property when they need to, that the right documents are being sent over to the right folks, that the transaction is moving along as it should. And of course, we guide buyers through the entire process all the way to the close. Within a home buying process, when we write offers, uh, what is very important, the dates that are in those contracts. Those dates are very solid marks out for us that we need to make sure as a whole team that certain conditions are met by certain dates. So an example, when you put in an offer, your next step is going to be, you typically have 10 days out, 2 weeks out for a purchase and sale agreement, which is the more important document in this process, which I'm sure Neil will talk about more. That gives us about 10 days to conduct inspections. We have to make sure we have an inspector in throughout that time. They look over the whole property along with you and your agent. If there are certain things that can be found, typically every home has something, right? Unless it's a brand new construction, there's always something that that comes up on the home inspection. Now we have to decide how to process and how to address those certain issues. There are some bigger issues than smaller. If your sewage system, which is referred to as Title file, is failing, we got a problem. You can get a mortgage, a conventional mortgage or an FHA mortgage without a passing Title V. There are some little things like perhaps a couple tiles are broken and need to be fixed up. Now it's up to you if you like to move forward with that. After we have the purchase and sale signed, now we're moving through appraisals onto mortgage commitments. It is marked out that that's the time when our lender is giving us going through all the underwriting process, and they're giving us a clear to close, and then we move to the final process of closing on a home. Notes get exchanged, you get your keys, you get into your new home. Now, I do get, as a realtor, I do get a lot of questions that are of tax nature. Folks ask us for tax advice, but I want to make clear that your realtor is not your tax advisor. He's also not your lawyer. That's what you have he's not your lender either. It's important that you have all those specialists, those professionals around you throughout this process, so you can make informed and legally sound decisions. Now, moving on to the second part is, how does the real estate market look like today, and what does it mean to you? So historically in Massachusetts, we always had this problem of low supply and high demand, meaning we have more interested buyers out there than we have the homes for sale. And this trend has been amplified tremendously through the pandemic, where we're seeing a huge outflow of folks from big cities into the suburbs. And as a result of that trend, we are in what we call a very strong seller's market. This is probably the most competitive market for buyers we have seen this century. It's not unusual for homes to hit the market on Thursday, have an open home on Friday and Saturday, and that home is sold by 5 p.m. on Monday. This is normal these days. It's also, open homes used to be reserved for weekends only. Now it's more and more common that we're seeing open homes on Thursdays and Fridays, or even Mondays and Tuesdays. So the market is definitely shifting. In January of this year, what we've seen on average, home buyers were paying about 10% over asking price on those winning bids. Now in February, that number has skyrocketed up to 15% over asking price. Now finally in March, I think we're seeing tiny little bit of a light at the end of the tunnel for buyers, when things are starting to come down a little bit. We're seeing some homes that are purely overpriced that still used to sell in January, December, February now don't sell, and we're slowly starting to see some reductions in pricing. So the prices are dropping a little bit on those very overpriced homes. Yet this is a very competitive market, and it can take multiple offers on multiple homes before you win a bid. So that's why it's very important to be patient, to be organized in this market, and to be decisive. And at the same time, you need to be flexible, and you need to be ready to go an extra mile. And out in this very competitive market. Use leverage. Your realtor, your lender, your attorney. This is your team. Those are your best advisors. Use us. Use our resources. Use our advice. In my opinion, it's an absolute must to start your journey of home buying by reaching out to a lender. Get pre-approved for a mortgage. You need to know how much you can afford. You need to know what you're comfortable with spending before you get out there. There is absolutely nothing more heartbreaking for a first-time home buyer than finding the home, falling in love with it, and not even having a chance to put in an offer because you are not pre-approved, not ready to do it. In a market when homes sell within days, you need to be absolutely fully prepared and organized. Now, pre-approval from a local lender like BCU stands out much more than from a from a national big bank. A local lender will have way better expertise of the immediate market, right? You have a person like Mark that you can call in the evening, early in the morning, and you know there is a person on the other side of that phone that will answer that call, give you the information you need, answer your questions. Me as your realtor, I need to be able to pick up my phone, call your lender in order to coordinate. Sometimes we need to tighten things up a little bit in the last minute. A big national chain, when there's no one on the other side of the phone, you're not going to be able to do that. Now, secondly, even when your offer is accepted, or your offer is being considered, I'm sorry, I should say, a listing agent will call your lender to verify everything from your pre-approval letter. A listing agent will ask questions, and if there's no one like Mark on the other side of the phone to be able to answer that call, answer those questions, your offer is not looking as strong as it could be. And of course, last but not least, but a properly written offer with all appropriate documents that should be attached with it, like your any required disclosures, your pre-approval letters, your copies of your check. That offer needs to be submitted properly. You need to have a realtor that is very communicative throughout this process. Us agents really love to work with other agents who are professional, organized, and responsive. It's everybody thinks that, or most people think that having the highest offer is the most important thing. It's not really. It's also about the ease for both sides of getting through that transaction. Now, if your offer is very close to another offer, but your agent, your realtor, your team, your lender, your attorney, they're responsive, they're organized, they're professional, that other listing agent is going to recommend your offer over any other offer, because they can see this is a transaction that's going to continue to progress smoothly with minimal friction and issues, and we're going to hit the dates that we need to hit appropriately. So us advisors, being patient, being organized, surrounding yourself with the right team are key elements in getting your offer in and getting you in the right home. Thank you.
Well, Igor, that was very informative, and I thank you for that. Again, we're going to hold the questions to the very end. If there are any questions, before I introduce Attorney Neil Cohen, it is that time. I have the distinct pleasure of picking or selecting at random another winner. So again, I have the bag right here. Bag of names. This is actually this will be the last one of the evening. Which camera am I using? Chris Estes. Congratulations on that. You're going to need it. It sounds like from where you are and what's going on in your life. But that's always, as we say, the only time in the hospital when it's a good time to go is when someone is being born. I can't think of another experience going to a hospital when it's actually good. So congratulations to you on that. With that said, I'm now going to introduce Attorney Neil Cohen of the Law Offices of Cohen & Cohen, located in Salem. Neil is a closing attorney. He's one of the closing attorneys for Brotherhood, as well as several other financial institutions. So Neil, the floor is yours.
Thank you. Thank you, Adam. I just want to say, first of all, Mark did a very good job. He explained the whole process. Really, take heed in what he says, especially the part about not going out after you apply. And then all of a sudden they do the verification, the bank, to make sure you still qualify for the mortgage. And they say, wait a minute, you just opened up an account at Home Depot and charged all your appliances. I can't tell you how many times I've seen that. And it's really not good, because if someone's up right on the line, it really affects your debt ratio. Igor, also very good. That offer to purchase, it's a very important document, probably the most important. It really sets the stage. You've got to be very careful of those contingencies that are in there. There'll be a financing contingency, an inspection contingency. A lot of times now, because the market's so competitive, what they're doing is they're waiving the contingencies just to make their offer more attractive. It's really not a good idea. I mean, sometimes you sort of have to do it, but there are little tricks. A good broker like Igor will know some of these tricks. People are just saying, okay, we're going to waive the home inspection. Really not a good idea. Another way to do it would be to waive, to say, okay, what we're going to do is we're going to get a home inspection for informational purposes only. However, if it shows more than $10,000 worth of repairs, then we can get out of the deal. But you've got to see, what you can stomach for that. 5,000, 10,000, that's up to you. And again, it's very important to have your own realtor. The listing realtor works for the seller. Igor will probably, and I don't want to talk for you, Igor, but there'll be, a lot of times they go to the building department for you. They see if permits were pulled. The listing broker doesn't do that for you. And it doesn't cost you anything. The commission comes from the seller. So you're getting all these services and you're basically not paying for them. It's the best deal out there. The other thing that's very important about the offer that a lot of people don't realize is that it's a binding legal contract. So, sometimes someone might go in and say, okay, we're going to make the offer. You've got to really intend on wanting the house, because a lot of times what will happen is, something will happen with a purchase and sale agreement. If you don't enter into a purchase and sale agreement, unless it states in that offer that you don't intend to be bound by that offer, that you intend to be bound by a purchase and sale agreement, they can take you to closing just on that offer. So it's something to be very, very aware of. The other thing is, again, do your due diligence. The real estate broker can help you with that. As an attorney, you know, for example, a condominium, we'll look at the budget. I'm not an accountant. You know, I can look at it and see if something really stands out, but I'm not at the property. If you look at a budget in the snow plowing, for example, they do maybe $5,000 a year, and you know it's a giant parking lot, it's going to cost more. I mean, I wouldn't know that type of thing. So it's up to you to really just, you know, do your due diligence with any of this stuff. The P&S, it sort of fine tunes the deal. You've got to make sure that, you know, everything that you were thinking about is in that purchase and sale agreement, because you can't come back later and say, oh, wait a minute, you know, they said they were going to leave, you know, whatever, furniture or whatever, and if it's not in there, you can't, you know, come back now if it wasn't in there. The other thing I also think is very important is, and I see this a lot of times, the home inspection comes back, there might be a few things to do, and a lot of times I'll have a broker say to, you know, to me, as the attorney, and if I'm representing the bank, they'll say to me, we're gonna, and if I'm also, and sometimes I'll back up too, sometimes I'll represent both the buyer and the bank. That's happened. You know, where someone will come to me and I'll say, oh, well, I work with Brotherhood, and, you know, so I'm doing the purchase and sale agreement, as well as representing the bank. If that's not the case, of course, my only allegiance really is for working for the bank. So I don't want to hear someone saying, we have a side deal that we're not going to let the broker, you know, the bank know about. We're gonna have, there's a problem with the furnace, but we don't want to raise any red flags, so we're not going to let anyone know. We'll do a side agreement. That's dangerous for a couple of reasons. First of all, if it's not done to your satisfaction, what are you going to say to the bank? We're not closing. Why? Well, I guess we must have lied. We said that everything was in the P&S, but we really did something else. And we have another agreement. And also you have more strength to enforce that if it's in a purchase and sale agreement. You know, you really don't have any way to enforce it if you have a side agreement and just trust the people. That's basically what I have with purchase and sale agreements. Again, just make sure that you get your contingencies in the offer, because you can't start inputting other contingencies now in a purchase and sale agreement. You know, it's sort of the offer sets the stage. Then we have the closing itself. So what happens is Brotherhood will contact me. They'll say, okay, here's the application, here's the property, here are the names. And I start ordering things in order to do the closing. What do I order? I order a municipal lien certificate from the town. What the municipal lien certificate does, it shows if any back taxes are owed. Once that municipal lien certificate is recorded, the town cannot come back and say, hey, we made a mistake 5 years ago, someone didn't pay taxes. So that protects you when it's recorded. We order a plot plan. I have a picture of a plot plan, and it's probably can't see it that well. But what it is it just shows the lot is described in the Registry of Deeds and the house as built on the lot. It's not a full instrument survey. It costs under $200, so you're not going to get a surveyor out there to do something, you know, a full instrument survey that costs, you know, a couple of thousand. What it does do, though, it shows that the house as located complies with zoning, and also that the house is actually on the lot, and there's no encroachments from neighbors onto your property. A lot of people after the closing will say, oh, I want a fence. Can I use the plot plan? Not the best idea, because again, that's not what it's meant for. It's meant just to, you know, again, say the house complies with zoning, and also that there's not going to be any encroachments. Then we do a title search, and that's the most important part. The title search by law, if you're doing it for a purchase, you're certifying, or I would be certifying to the bank and to the buyer that I've done a property search for at least 50 years and that the title is good. A lot of people say, well, the house is new. It doesn't matter if the house is new. You've got to go back and look at that land and see who owned the land. You've got to go back, like I said, a minimum of 50 years. You start with a valid deed for consideration, which means someone bought the property, it wasn't a gift or something like that. And then you go forward with that. And the way it works is it's not like the registry of motor vehicles where they give you a certificate and they say, oh, here it is. What you do is you've got to look at, they call it a grantor index. Anyone who owns the property shows you what they did, shows you if there's any liens, if there's any mortgages. You've got to make sure that they're all released properly, the mortgages and any liens. You check for easements. You also look at the registry of probate to see if someone died, if the probate was done properly, make sure the property got into their heirs, if that's how the chain of title goes. But a lot of times we do find problems. We find problems a lot of times. There's also a step back. When I said that there was no certificate as such, there's also another system of recording. It's called land court in Massachusetts. So you can either have recorded land or registered land. If it's registered land, what happened was there once was a dispute. It went through land court. And now instead of going to the grantee indexes at the registry of deeds, the land court actually has an office in each registry of deeds. And there is a certificate, and that'll show you easements and all that. One thing that at the time that happens when you do the title search, you look at it, you find out if there's any problems, you let the seller know, they try to correct them. But some things aren't easily seen. For example, if there was a forgery, if sometimes even laws change, and that's why some very good thing to do is to buy title insurance. You have to buy it for the lender anyways. It doesn't do anything for the lender, however, unless the lender has foreclosed and then tries to sell it and they find there's a title problem. So it's important that you get your own owner's title insurance policy. I can't tell you how many times there's been like a bad discharge of a prior mortgage. In other words, someone mortgaged the property, they gave it to Countrywide, and then Bank of America discharged it. Bank of America didn't own it. You need to have an assignment from Countrywide to Bank of America to make the discharge valid. These are the little types of things. Indexing errors in the grantor grantee index in the registry of deeds shows what people do. Because it's only as good as the person doing the inputting. It protects you against those types of things. Another major thing that it protects you against they had a certain way of doing foreclosures in this state. It was like 2011, they changed the laws on how it was done. All these foreclosures became invalid. People thought they had good title to the property, they didn't. So unless you had an owner's title insurance policy, that you were out of luck, basically. You didn't own your house. Some of the things that can affect the property, most of them have easements. Just an easement, for the telephone company or the electric company, things like that. That's about it with that. There's also, when you buy the property, you can do what they call declaring a homestead. And without getting too into that, Massachusetts, if it's your principal residence, you can declare it as your principal residence. And you get up to a $500,000 exemption against different kinds of executions, lawsuits. Won't protect you against taxes, won't protect you against probate court orders for support payments. But it's only, they just charge $35 to record it. So it's a good thing to do. So I gather those things. And then the next thing that happens is it's almost like conducting an orchestra, I get stuff from the buyer, I get stuff from the seller, all the different figures, the taxes, I'm able to do adjustments for that, taxes, condo fees, and I put together a settlement statement. Now they call it a closing disclosure, but we also do a settlement statement as well. And what it has on it has all the costs and fees on there. So what you'll have is you'll have a list of all your costs, and then you'll have any adjustments. So if the seller paid the taxes in advance, you'll have to reimburse them for that. If the seller hasn't paid the taxes, you'll pay him and he'll reimburse you depending on the time of year that the closing happens. It used to be everyone would come and sit down at the table. Now, because of COVID, it doesn't work that way. We try to get the documents ready a few days ahead of time. The seller gets everything shipped to the attorney's office for the seller who under power of attorney signs things. I still meet with people in my office, the buyers, and we sign everything. After that happens, I go to the registry of deeds, or I can do it. There's a way to download the documents and you can record electronically. Until that recording happens, you don't own the property. When that property happens and the deed's recorded, you can then look online and there it is, and it shows you're the owner. You record the mortgage, so the world has notice that, yeah, you own the property, but the lender has a mortgage on the property. And then the title insurance issues, and that's about it for what happens at the closing. Just trying to think. Yeah, that's basically it. I mean, it sounds simple, but it really isn't. It takes a lot of work. And again, there's just be realistic going into it, have real expectations. What Igor was saying was so true. And it's not just because I'm here doing this for Brotherhood Credit Union. I mean, I've had situations where it's been a big out-of-state lender and they're just not aware of how things work here with our timeframes. Our dates are very important. I've had lenders that won't give a commitment until 2 days before the closing, like literally 2 days before the closing. And like we have a commitment date, and then we keep having to get extension after extension after extension from the seller. And if the seller's not willing to give an extension, you have two choices, get out of the deal or just say, okay, I'm going to just let it ride and pray that I get my financing. And if you don't, you lose your deposit. And again, a lot of these national lenders don't realize how we do things in Massachusetts, that the commitment date is a very meaningful date, and they'll just drag things on. I've even had some brokers tell me, it's never happened to me, but I've had brokers tell me that a big national bank, who I won't mention their name, they said, okay, we're ready to close. Sorry, we're busy. What do you mean you're busy? Well, it's very busy now. The rates are low. The refis are just moving along. We didn't have time to do it. We need another 2 weeks. Well, no, the purchase date is this date. The seller's buying something else. Sorry. And that really happens with these big national lenders. So that's about it. Again, thank you for the opportunity. If you have any questions, feel free to ask.
Well, Neil, I thank you for that. It's very informative. And, that's a lot of behind the scenes stuff that, before I bought my first house, I didn't even realize anything about the closing attorney. So a very good job there. So our three presenters have presented this evening. If anyone has any Q&A, we'll open it up for Q&A. You can take yourselves off mute, or you can put it into the chat line and we'll direct it to the correct person. If you want to take it totally offline, I will be sending out an email tomorrow with everyone's information, and you can email and or call the three presenters this evening. So with that said, are there any questions from the floor? Okay. I'm just going to give it about another 20 seconds in case someone's putting it into the chat line.
Question.
Yeah, yes, sir.
This is probably for Igor. What is the typical amount that someone will put down on the house when they make a purchase and sale agreement? What is being held in escrow?
What is customary in Massachusetts, it's up to 5% of the purchase price excluding the earnest money deposit, which is the first check, which tends to be $1,000 to $2,000 that you put down with offer. So the with purchase and sale, it's customary in Massachusetts to put down equivalent of 5% minus that $1,000.
Thank you.
My pleasure.
Typing to someone right now. Okay, very good. All right. Any other questions from the group? Stacy, you are most welcome, and I gave you a plug tonight, so I get one free session or something when COVID is over. Lord knows I'll need it now. All right, well, seeing no other, again, we do have the opportunity for Q&A with the three presenters' contact information, which I will be giving out tomorrow, as well as the certificate for a $500 credit towards closing. As long as, you know, it goes through Brotherhood and we close within 6 months. Boothie, you are most welcome as well. Now, this was a terrific session, and you know, we look forward to maybe holding a few more of these in the future. With that said, going once, going twice, 3 times. I'm going to end it right now, and I hope everyone stays healthy and stays well, and good luck in all your purchases and home ownership endeavors. Thank you.
Thank you, everyone.
Thank you.
Okay, well, we'll see you guys later. I'm going to sign off right now.